Let's look at U.S. oil priced in gold, all right? So before we do that, let's look at the price of oil. Here is the price of oil. I hope this chart is proof to you of the inflation we are about to undergo. As I've told you, interest rate cycles, 1940, 1980. 1980 to 2020, we had declining interest rates. 2020, going forward to 2060, increasing interest rates. What happens in this environment? Well, look to the past, okay? So we can see that the price of oil, when priced in gold, is historically, when priced in dollars, is historically up. It bounces around in a range. The center line through it is the average price of oil, priced in dollars, okay? When oil reaches the upper end of this range, it's expensive. Sell oil. Cash is more valuable than oil. As I told you, it consolidates for long periods of time, 20 years or more sometimes. The price of oil stays virtually unchanged. You can see by monitoring this chart just in dollars when oil is about to do something drastic, okay? Expensive, cheap, expensive, cheap. Where are we today? On the bottom end of this range. Think of this as almost this isn't even inflation adjusted. This is just priced in dollars. Oil is literally almost as inexpensive as it has been throughout history when priced in dollars, okay? So yeah, back here, yeah, oil was only $3.49 per barrel. But today, priced in dollars, because our dollar has lost value, oil at $54 per barrel is still just as cheap as it was at $3.49 a barrel back here. What happened when we were at $3.49 a barrel? Look at this move. Inflation. This is the 1970s through 1980 commodity supercycle. See this change right here? Oil increased in dollar terms 1,000%. That means tenfold. So if I bought oil here and I held it for 10 years, I increased my wealth in US dollars by 10 times. So 100,000 became a million. What are we approaching? Historic undervaluation of oil. And do not let the media lie to you. Oil is not dead. There is no source of energy in history. We burn more wood today than we did when wood was our source of energy and cooked on wood stoves. We burn more coal today than we did when coal was our primary production. Oil will never decrease in your lifetime in usage. It will go up. Okay, yeah, we may shift to other forms of energy, but I assure you that we are not ready to replace oil. Every piece of plastic you own is made by oil, even if it's not used as a fuel source for your car in the future. I assure you it will be used in our economy, and that need will go up. We are basically at historical lows in oil valuations. I can't say it won't bounce down a little bit more for a few more months, but what I'm telling you is that between now and 2027, oil is going to make a tremendous move. I believe we're already on the move upward. I'm looking at a 1 month chart, okay? At a 1 month chart where each of these candles is a month, my projection of 1970 move shows that we will see oil at $513 a barrel, which is an 8x increase, okay? So 1970s, you would have been looking at 10x. I could see it being an 8x this time. Do you think your wages are going to increase 8 times over the next, 2033, over the next 7 years? Do you think your wages will increase 8 times? So if you make $100,000 per year today, do you think you're going to make $800,000 per year in 2033? If the answer is no, then my friend, you just became poorer, because this is an example of the moves that are coming. And this is not theory. This is happening, okay? So get ready. This is going to happen. All commodities will move like this, not just oil, not just gold. I'll flip through some charts. I'll show you copper. I'll show you uranium. Name your commodity. It's going up. All right. So lastly, let's just look to help you understand ratio charts even a little better. Well, before we do that, let's go back to crude oil. Let me switch time frames for you. Why do I think we've already broken upward? Okay. If I switch to a shorter time frame where every candlestick equals a week instead of a month, you'll see that I have this range that prices are bouncing around in. They're consolidating, right? This is like a flag. This move will be replicated on the top of it once it breaks out of here, okay? Let's move closer into the daily chart. On the daily chart, every one of these candlesticks is a day. If you see my line right here, I've run a line through major tops and recent price action. And in the shorter term, recent tops and the price action, I believe oil is on the verge of breaking out of both of these, which will begin giving it some upward momentum, okay? The lower end of its range, I'd say, is $52 presently today. If this continues through 2027, could oil go lower? Yeah, it could go lower. It could go down to 46 a barrel. I can't tell you that that's going to happen. I can tell you that if you take my full financial course, the things that don't make sense to you, why are we invading in Venezuela? All the things that don't make sense to you, why you vote for the conservatives and nothing changes. It's all explained. This is all financial system stuff. 100%. The bankers run the world, and I can show it to you definitively with proof. I can show you things you can't even contemplate. In the 10 days or so it'll take you to go through my full financial course, you'll understand things that right now seem counterintuitive to you. In the event we had a financial crisis, okay, the economy fell off a cliff, bare minimum, oil could drop to $30 a barrel. I don't see that happening. The economy is already starting to run hotter and hotter. Do I see signs of problems in the economy, like increasing unemployment? Yes, I do. But you also see increased government spending. You also see I can make an argument either way, but in the event oil did fall through here, man, you got to take a loan and leverage your house and buy everything you can oil, because that is life-changing wealth. And speaking of that, I'm not a fan of leverage most of the time, but if you take my full course, you understand that the dollar is debt. And I'm going to teach you to understand that during inflation that we're approaching, saving in dollars is like saving in debt. Do you want more debt? The answer is no, then don't save in dollars, okay? During inflation, asset prices go up, but debt becomes worth less and less and less. Why? You're paying for it in dollars that are declining in value. So if I have assets moving up and my debt moving down in affordability, I'm maximizing my wealth production. So what am I telling you? Look, I'm not in favor of taking risky bets and leveraging your assets to take debt on them in a typical environment. But when I have charts like this, when I have clear evidence that oil is historically cheap and going to go to the moon, when I have clear evidence that all commodities are going to the moon, when I have clear evidence that the stock market is likely going nowhere or backwards for several years, I am at the point where I am seriously considering leveraging every asset I have, taking loans against the gold and silver that I own, taking loans against the equity in my house to literally buy more commodities. Why? Let's say I had $100,000 of investable money today, but I had $400,000 tied up in home equity in gold and silver. Okay. Well, if my money is going to 10x in US dollars by investing that 100,000 in commodities, okay, so 100,000 in 10 years becomes $1 million. Well, what happens if I borrowed 400,000 against my assets? So now I have 100,000 cash, plus I borrow 400,000 against my assets. The value of that loan on the asset goes down due to inflation, my dollar becoming worth less, and my assets 10xing. So now instead of having 100,000 become 1 million, my 500,000 of cash, the 100,000 of cash I held plus 400,000 I borrowed, now 500,000 becomes 5 million in 10 years. This is exactly how people make fortunes in real estate. This is how I became wealthy in real estate, is understanding that leverage, when done safely, is how you drastically increase wealth. And it's truthfully how you create wealth that you can hand down to your children. Without it, you're just keeping up with inflation. Okay, so I understand that your grandparents said, don't take debt and sell and save your dollars. Okay, well, that worked up until 1980. You got a real rate of return on savings, meaning that 18% interest rates beat the inflation of the day. You actually did increase wealth by saving. Since then, that has not been true. Your real rate of return is negative, meaning that inflation is higher than the interest rate you're paid on savings. Therefore, you lose purchasing power. Leverage is asking me to save dollars is like asking me to save debt, and borrowing money against assets to put it to productive. I'm not talking about to fund my lifestyle. I'm not talking about taking a $400,000 loan to go on vacations and buy Lululemon bags. I'm talking about taking 400,000 of borrowed equity in my assets to buy 400,000 of more of assets. It's going to be life-changing wealth coming up here. Again, I've already shown you the chart here on oil. This mark right here in 02, that's where I believe we are at in today's move. Okay, so taking the move from right here in 01 to up here in 08, if I overlay that from where it breaks out, that's going to be this move up here. You would be looking at $500 oil or $493 oil by 2032. If I took the 1970s move from back here to up here around 1980, that 1970s move has us at $513. The point is, when it's this historically cheap and it's been consolidating price this long, the breakout that is coming is life-changing wealth. Okay, so you do what you want. I know what I'm doing. I'm slowly buying the bottom of oil producers, oil explorers, oil service companies. It may not move hard like silver has for another 2 years. It might be 2027 before this moves. By 2027, this thing is going up. Okay, so I don't care if I buy today and I lose 10 or 15% in value. I'm not buying it for a trade to get out of today or buy today and get out of tomorrow. I'm looking at life-changing wealth moves that are coming right here. If I don't do this, if I don't buy these assets that are about to break out so historically, instead of increasing my wealth, I'm decreasing my wealth, because as oil goes up, so too does everything, and the cost of everything in the economy. I'm going to be able to afford less. I want to afford more. Okay, so